Welcome to the MoneySmartLife.org Home Equity Recipes and Strategies webinar. My name is Mansa Musa. I'm will be delivering the information on this seminar for you today. What is home equity? That's the first question we need to ask, because what we're going to be looking at in this seminar is what home equity is, how do you get it, how do you use it, what are some of your options and choices. Now, first of all, let's get a definition of home equity. And home equity is the market value of a homeowner's unencumbered interest in their real property. That is the difference between the home's fair market value and the outstanding balance of all the liens on the property. The property's equity increases as the debtor makes payments against the mortgage balance or as the property value appreciates. So, bottom line, home equity is the difference between what your house will sell for and how much you owe. The difference is your home equity. As you pay down your mortgage, your equity increases. As your home value goes up, your equity increases. Now, home equity can be wealth and capital. It's not cash. It can be positive or negative. It can be leverage. And home equity also fluctuates, and it's not real. It's a balance sheet entry. Your assets minus your liability, as far as your home goes, is your home equity. Now, first, the harvest. How do you get the home equity? Remember, we said the home equity is not cash. So how do you get home equity? You cannot take a brick out of your house, take it to the gas station and say, fill it up. You've got to convert that home equity into some form that's usable in the economic system. So first of all, ask yourself why you want to access your home equity. And I believe you need to ask yourself why 4 times. When you ask yourself why the first time, you'll come up with an answer or a rationalization. Ask yourself why again. Once again, you'll come up with an answer or a rationalization, and continue to do that 4 times. And a lot of times that 4th time, 3rd question will get you to the root cause of why you really want the money. And then once you do that, just be honest with yourself and see, does the rationale hold up? You've got to be honest with yourself when it comes to your home equity, because like most Americans, this is maybe the biggest asset that you have. So know the real you and how you handle your money. Not the aspirational you. Not the you want to be, but the you that you actually are. And we encourage you, we know you're on a path and on a journey. But when it comes to home equity, accessing your home equity, etc., know the real you, how you handle your money, not the you want to be. And more importantly, the real you as evidenced by your current money behaviors. If you say you're going to save the home equity or invest the home equity, are you saving anything now? Are you investing anything now? Look at your behaviors. How do you spend money? How do you control your spending? How will you react if you have a large sum of money available to you? Know thyself and what will happen. So let's look at some of the recipes on how to get the money. Once again, we've got to turn it like cooking, right? You got to turn that ingredient into something that's usable. Same thing when it comes to money and money recipes. We've got some other videos on some debt reduction recipes and other things. We'll leave go to our website, MoneySmartLife.org, and or our YouTube channel, and you'll be able to find those recipes. But the first recipe is leverage. And basically all leverage is an IOU. You're going to borrow the money. And when it comes to home equity, there's different ways that you can do that. First of all, there's a home equity line of credit known as a HELOC. It's treated as almost like a charge card. You use the equity in your home and you can borrow up to the limit of your home equity line of credit, pay it down, borrow again. So the balance can revolve. The home equity line of credit is one way, and a way a lot of homeowners access their credit. Once again, they're given a checkbook up to a certain limit, and they can access that money without any further discussion with the bank. They just have to make their payments on time. Another way to access your home equity, if you're an older homeowner, is a HECM, which is a home equity conversion mortgage, more popularly known as a reverse mortgage. Now, what a reverse mortgage does, it allows you to access the equity at your home at an annuitized rate. What that means is the older you are, the more money you can access, or the higher percentage of your home equity you can access. So this may be a way for older people to access some of their equity. And once again, you can get it as a line of credit, you can get it as a lump sum distribution, or you can get it as regular payments. There's different ways you can do that. If you're going to look at a home equity conversion mortgage or reverse mortgage, you really need to take a deep dive look at that. In fact, education is required as from a nonprofit counselor before you can get the mortgage. So take a deep look at it. But once again, the great thing about a home equity conversion mortgage is you don't have any payments. You don't have to make any payments on it, unlike a home equity line of credit where you do have to make a payment on it. The reverse mortgage is in place as long as you're in your home. So it can be a good alternative for people to access their home equity. Another vehicle under leverage, and once again, borrowing money, is a cash out refinance. Now, what a cash out refinance is, either through a new first mortgage or a second mortgage, not a home equity line of credit, but a second mortgage, you're able to access cash. So if your house is worth $200,000 and you owe $100,000 on your house, then you have a $100,000 equity position. Now, you can access that $100,000 based upon the guidelines of whatever loan program you choose, but at the closing, you can end up with a lump sum of cash, and that's called a cash out refinance. So you're refinancing your home and taking the cash, the proceeds. The other thing you can do with home equity is you can use it as collateral, and liens can be placed against your home equity. So once again, you're borrowing money, and this would be the collateral or security that the lender would require. In other words, they'd put a lien or a mortgage or something like that on your home claiming their portion of the equity. Another way to harvest home equity is you can sell the house. This is probably the cleanest version because there's no payments or anything like that. You sell your $100,000 house for $200,000. I'm sorry, you have a $100,000 mortgage on your home. You sell your house for $200,000. That's going to leave you with the $100,000 equity. So selling's a good way to harvest equity. Of course, you got to figure out some place to live after you sell it. The other thing you can do with home equity is to just hold. You don't have to harvest it. You can just hold on to it. Let it appreciate, go up and down, whatever, because we're talking about your primary residence here, not investment property. This is a place you live, and you're a little more insulated against home equity fluctuations than would be the case with investment or commercial property. For example, real estate values in Michigan hit their peak in 2007. We all went through the crash. Values went down over 50% statewide, worse in some urban areas. But pretty much now, 10 years later, those values have all recovered. So those people that were who lost a lot of equity in the crash but continued to live in their place, if they're still living there, they've recovered. So holding on is a strategy with home equity. You don't have to do anything with it. Now, one of the myths that is around home ownership is that the benefits of home ownership are the same for everybody. Well, Michelle Dickerson, a law professor at the University of Texas, wrote a book called Home Ownership and America's Financial Underclass: Flawed Premises, Broken Promises, and New Prescriptions. And to quote her, I encourage you to read the book if you're a homeowner or thinking about being a homeowner, more importantly. But perhaps the biggest home ownership myth is that every homeowner receives the same positive economic and non-economic benefits. This is simply not true. So when you hear the marketing appeals and other information that comes your way regarding home equity, your ability to access it, the value of your home, and those kind of things, understand that that might not be true for everybody. There's definitely a difference. For example, the average white family's home equity is $86,000. The average black family is $50,000 of home equity, and the average Latino family is $48,000. Now, there are a lot of reasons for those disparities. Many of them systemic in nature, but the issue is you have $50,000 or $48,000 in equity. That's something that if you do something with it correctly, that can help your financial situation. But once again, don't assume that everything you hear will be true for your particular situation. So after you've harvested the money, after you've decided to use one of the vehicles we talked about, the HELOC, the HECM, the cash out, refinance, the sell, whatever, what do you do with the money? There was a popular song, Now That You Found Love, What You Gonna Do With It? I would change that a little bit and say that same thing to you about the money you got in your hand from your home equity. What are you going to do with it? What are you going to do with the proceeds? Let's look at some of your choices and options and things that you can do with your money. The first thing you can do with your home equity is invest it. Now, I hope you already had a reason figured out before you accessed your equity. You didn't just grab the money and let it sit around and figure out what to do with it. So you can invest the money. Now, what do we mean by invest the money? Traditionally, if you look over a long period of time, real estate appreciates at a rate of about 4% per year. If you take a look at the stock market, once again, over time, it averages about 12% a year. Now, neither real estate nor the stock market go up in a straight line. They're up, they're down, etc., and so forth. But a 12% return is better than a 4% return. So using or accessing your home equity to invest in a higher rate of return may be a strategy that you want to do a deeper dive on. The next thing you can do with the money from your home equity that you've accessed, you can spend it. You can go on a spending spree. You can buy things. You can remodel the house. You can spend the money. Another thing you can do with your home equity is you can ensure the lifestyle of you and your loved ones should something happen to you or your ability to earn income. For example, you can make lump sum premium insurance payments. Now, once again, you need to get with an insurance professional that you trust, or even more than one, and go over what your options are if you're considering lump sum premium. But you can buy lump sum premium life insurance on yourself and other people. You can buy lump sum premium health insurance and disability insurance, lump sum income insurance. That's the disability insurance. You can pay enough money, and it's not going to be small, but you can pay money to ensure a flow of income to offset any disability that you may have, as well as old age, etc. This is especially important if you have relatives or other people that depend on you that are unable to work for themselves, if they're disabled in some way. So this is something that you can consider. Once again, it's a lump sum payment that will ensure their future. Can't stress it enough. Talk to a licensed insurance professionals to see what your options are. The other thing you can do with your home equity is you can use it for capital. You can capitalize your business, your dream, invest in yourself. If you're going to start a small business, and if you're going to do it, one way to do it is bootstrap it through your own funds. Another way is loans, etc., and so forth. But if you go to get loans and those kind of things, one of the things that lenders or prospective lenders will always want to know is what skin you have in the game. So using your home equity can help you be able to have skin in the game. You can educate with your home equity. You can educate your children. Many people have done that. They've accessed their home equity to pay for college. So education is one option. Now, when it comes to home equity versus student loan debt, we want to just dive into that a little bit deeper. Is a home equity debt is tax advantaged at this current time, but student loan debt isn't. Once again, you need to talk to your tax professional. There are limitations on mortgage deductions, so make sure you're eligible for them. The interest rate on student loans versus mortgage debt or home equity debt, you need to take a close look at that. When it comes to bankruptcy, you cannot, should you fall into some dire economic situation and circumstance, you cannot bankrupt out of student loans for the most part, but you can bankrupt out of or have a second mortgage reduced. Um, Even on your primary residence, you can have a second mortgage reduced. And if you have real estate or investment property, you can leverage that and have that reduced. Uh, so be aware that bankruptcy will not be fail safe for you when it comes to your student loans, but it may provide you some relief when it comes to your home. Once again, there's some details that go into that. What's the term? How long do you have to pay on your student loans? Normally, it's about 20 years. What your payment will be on your home equity if you use it to pay off your student loans is something that you'd have to look at. What's the total cost of repayment over the life of the loan? Actually add up the interest, how it's calculated, and take a look at that. And then finally, what opportunity costs will you miss if you take your home equity, for example, and pay off your student loans? And now you don't have that home equity available to take advantage of opportunities that may come along. So don't automatically assume that trading home equity debt for student loan debt will improve your situation. As we say, the dollars are in the details. You really got to do a deep dive on both loans to see which one makes most sense. And here's the other thing. Both of those loans, student loans and home equity loans, are long-term loans. So you really need to think about what your life goals are and those type of things before you just make a snap decision. That concludes our webinar. We really appreciate you being here. Once again, this was a 10,000-foot view and overview of home equity, what it is, the type of things that you can do with it. We appreciate you attending. Go to our website at MoneySmartLife.org and take a look at some of the other things we have going there. Information to empowering working class families, financial well-being in working class families. That's our goal. Thank you and have a good day.